between now and then. But we've always known that that was a consequence of the Crown Guarantee Scheme being put in place. So,
what sort of level would they be, and what's your current reinvestment rate like?
Look, reinvestment rates have dipped off quite significantly over the last 2 or 3 months, actually, and certainly not helped by all the publicity that we get around assets and other things either. I think there's about $40 million from memory that rolls off between now and the end of the scheme, and obviously there is a bunch of that comes off right at the very end in October. So, and I know the A&F guys are actually working very hard to make sure that they closely monitor and manage liquidity, and they're doing a very good job of that. Yeah.
How would that compare to a normal period of 3 or 4 months that we've got between now and October?
Look, a lot of this was hot money. We always knew that. Obviously, late April, May was a particularly hard month where we had quite a big wedge of funding that came in as part of the Crown Guarantee Scheme introduction, that 18-month money, and that's gone now. So what we're concentrating on now is, just focusing on reinvestment, getting out to operate outside the Crown Guarantee Scheme.
And are you looking into other potential sources of funding as well?
Look, continually. I guess I don't view the size of our loan book or the size of our funding availability as being obviously a driver to profitability. There may be a smaller finance business that comes out of this, a reduced book size, and it will be more profitable than the larger one. But funding, as I say, is very, very difficult. There's plenty of things that you can do and ways that you can look at it as far as what you source from where. But those are significantly reduced to where they were 2 or 3 years ago, so it's very hard.
Are you confident that Allied Nationwide can survive?
Look, I think there's some significant challenges in the finance industry in general, and every day is a challenge. But given the support of the parent, yes, it can survive. Yeah.
Could a merger with another company be a possibility?
Look, we're on the lookout for opportunities continually. Whether or not a merger, I don't know. I've stated we're concentrating on strengthening our relationship with ResiMac. We're quite close to those guys at the moment, and I think they've got a lot of strengths in areas that we can learn from there. Obviously, they operate in a completely different segment of the finance space, securitising home mortgages in Australia, and have strong relationships with a number of different funding lines. So we're just, as I've said before, courting there basically.
Back to Hanover, obviously when that deal was done in December, the Hanover debenture holders were issued Allied shares that were at the time valued at 20.7 cents. Obviously your share price is now trading around the 5 cent level. I guess quite a few of them have bailed out, but some of them are still there. What sort of returns can they anticipate, and can they perhaps expect in the next year or two?
Look, I think share price is largely a factor of number of sellers versus number of buyers, and we've had a few disappointing setbacks. Obviously, our exclusion from the NZX 50 has been a significant one, and I think the steps taken last week, or the announcement that was made by NZX Data that we wouldn't be included for another considerable period, has been certainly against us. And very, very disappointing. In fact, it's the first time I think that's ever been done like that, an entrant of reasonable size. I think, given time, there will be obviously more asset realisations, more cash deployed, and a strengthening of the balance sheet. And it's really to board and the senior executive to structure the business appropriately and demonstrate to people that there is something which is profitable and sustainable to come out of this. Hanover investors prior to the deal were obviously being paid out 2.5 cents a quarter of capital, and it was the quality capital at the front end of all their loans that was coming out, and how much they would have got if they'd stayed where they were, I'm not in a position to speculate. We're not returning capital at the moment, we're investing capital, and when it comes to dividend policies and things, it's I think dividends are a wee way off yet, and I'd be imprudent to say otherwise at the moment.
I mean, obviously one of the arguments might go along the lines of if Hanover had been put into receivership, then would have been wound up, and perhaps they would have got any cash that was realised, the debenture holders. So I guess what you're suggesting is that perhaps over the long term they'll get something, but it's hard to say at the moment when that is and how much that might be.
Yeah, look,
in terms of dividends at least.
Yeah, receiverships, you're quite right. They are essentially a project. I view a receivership as having a start date and an end date, and there is an initiative to sell all the assets. And obviously that costs money because the receivers have fees and things as well. We know because we appoint receivers to various things. I think the track record of winding up finance companies in New Zealand, demonstrated by a number of them, Capital and Merchants, and Strategic, it'll be interesting to see what flows out of that, has not been particularly good. There's not much left by the time these things are wound up in general, and we hope we'll get a better outcome than achieved in other instances, I think. And you're right, there will be something that flows out for other investors. Yeah.
But realistically, I guess, in terms of share price appreciation, possibly dividends, how long are they looking for that type of thing to actually happen?
Look, I'm under no illusion share price is a factor of business performance, and I think if we can demonstrate that our operating businesses and our investments perform, and we've got a sensibly structured balance sheet and a strong and visionary board and executive team, then subsequently we'll be rewarded with an increase in share price.
Have you got any more land or asset sales that are imminent?
Look, we're working on a number of deals any given day, and there's always something that's imminent, but I never bank a deal until the money's banked. They can go well or they can not go at all. So.
We've had a few people post comments on our site about a company called Echo Capital, run by a former Hanover CEO, suggestions that they played some sort of role in the getting together of allied farmers in Hanover. Is that the case? And if so,
look,
what
Echo
was it?
were an advisor to Hanover during the negotiations, as far as I'm aware. Yeah. Look, as far as the deal was concerned, we also employed advisors to work through various things with us as well.
So who were your advisors?
We had a number of advisors on the deal when we were doing it. KPMG were involved in some aspects, and so were Ernst & Young. So, yeah.
And on the investment banking side?
We had a number of individual companies involved in some of the valuations and things.
Okay. Can you say who they were?
No.
Okay. Well, look, thanks for coming in today, Rob. I'm sure we'll be talking again in the future. It's a topic, obviously, of a lot of interest to our readers. This is Gareth Vaughan with another Double Shot interview at interest.co.nz.